says strikes are going to continue throughout the week, probably for weeks now. What impact is this going to have on the markets? I was just looking there. I guess we'll find out here in a few moments to see how it starts off. But we're all looking at oil for sure, Michael.
David, I think what we can say is that sentiment is shifting from risk on to risk off. That was already happening. The markets were anticipating these moves, which were somewhat telegraphed by President Trump and the administration over the last few weeks. We've seen some weakness already this morning in equity markets on that basis, while at the same time, traditional safe havens like treasury bonds, like oil in particular, and gold, all rising over the weekend. Oil is a little bit different, because the concerns stem from global supply, and will what's happening in the Middle East disrupt global supply, given the impact on Iran itself, but also the neighbors that have been affected by this conflict.
Yeah, so let's talk about oil for a second, because we're obviously getting reports that Iran is now restricting navigation along the Strait of Hormuz, and that, of course, is one of the world's most critical routes for oil exports. Some are saying this could bring us back to like this 1970s style gas crisis. I know it feels alarmist, but clearly when the Strait of Hormuz is affected, it's going to affect oil prices, I'm assuming, or do I have that wrong?
I think you're right generally. Now, we're in a very different situation from the 1970s. At that time, the U.S. was a net importer. About 60% of our oil came from overseas. OPEC had about, in other words, the Middle East producing countries had about a third global share. Today, the U.S. is the world's largest producer, and we're a net exporter. And thanks to President Trump and the policies to maintain American energy independence, the situation is very, very different. And the importance of the Middle East has also shifted quite a bit since then. OPEC doesn't have the power that it does. So for a number of reasons, I don't think the analogy is quite the same. Of course, there could be global supply issues. We're in a much stronger position than we were 50 years ago.
So we got less than a minute left, but you just said something about a minute ago about a risk on and risk off. Explain that in terms of how that works with the stock market. So risk off is a good thing then?
Not necessarily. So risk on means that investors are positive and have a good view, want to put money at risk, want to invest into the market. Risk off means fear is prevailing over greed, at least for the short term. And they're more concerned about capital protection, preservation, than they are about seeing the next high-flying growth stock go up. And so what we're seeing is that shift, as this, obviously, the conflict with Iran is raising concerns about what it means for oil, what it means for global markets. And you're seeing investors take a much more conservative position. That's likely to persist through the week and indeed through the conflict.